This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Bashardis. Thanks for joining us at XM.com. The U.S. dollar maintained its northward bound on Friday as investors awaited the hotly anticipated jobs report out of the United States for possible clues about Fed tapering. There have been subtle hints from Fed policymakers in recent weeks that the time to start talking about tapering is nearing, and a strong NFP print for June would fuel expectations that discussions on how and when to begin withdrawing some of the pandemic stimulus will be held over the summer. But with the dollar having already surged significantly this week, there may be limited upside from a strong jobs print. Analysts are expecting non-farm payrolls to have risen by 700,000 in June. The dollar is currently trading firmer on the day against a basket of currencies and has climbed to a fresh 15-month high versus the yen. Some safe haven flows could also be supporting the greenback amid ongoing jitters about the fast spread of the Delta variant across Asia and the potential damage to the region's recovery. However, there are also some concerns about tighter monetary policy in China, as well as increased frictions between Beijing and Washington. Shares in China closed sharply lower today, with the CSI 300 index plunging by 2.8%. The Tokyo stocks ended their 4-day losing streak, and the Nikkei 225 index closed up 0.3%. On Wall Street, the S&P 500 had another record session on Thursday, finishing the day up 0.5%. U.S. stock futures were last indicating a slightly higher open. Gold was on course for a third straight day of gains despite the advancing dollar. The precious metal may have found support in the renewed virus woes that have hurt sentiment in Asia. Aside from the U.S. jobs report, the other focus today is on oil, as OPEC and its allies have yet to reach a decision on whether to raise production. Yesterday's ministerial meeting of the OPEC Plus alliance was postponed to Friday after the United Arab Emirates blocked plans for a gradual boost to output by the end of 2022. Oil prices soared on Thursday on expectations that the major producers would agree on a modest easing of the supply curbs, but the reported disagreements have dampened the rally. WTI and Brent futures were last trading slightly down on the day within the $75 per barrel handle. This is today's Daily Market Comment. Thanks for joining us at XM.com.